Some people are even saying in 5 years, gold could be worth double what it is today. And I don't think that's absolutely unreasonable. I feel like a lot of people don't understand that every major leap in technology creates opportunity, but more importantly, instability. I mean, AI isn't just changing companies, it's changing power, currencies and trust in the system. That's why I'm increasing my gold reserves, and I'm not alone. But why does this matter for everyday investors like us? Well, many people believe China is trying to replace the US dollar, as they're not just buying it quietly, they're making it usable. They've been building something called the gold corridor, which allows gold to be stored across different locations and used as a form of trust in international trade, especially with Brazil, Russia, India and South Africa, otherwise known as the BRICS nations. Gold has now overtaken US Treasuries as the world's largest foreign reserve asset held by central banks worldwide for the first time since 1996. So why are we seeing this sudden shift towards gold? Well, as of 2025, gold has been reclassified as a Basel III Tier 1 asset. Put simply, gold can now be treated the same as cash or US Treasuries on a bank's balance sheet, which is a big change because before this reclassification, banks weren't allowed to count its full value. This is having a big effect on the price of gold because before this change, most financial institutions like central banks, sovereign wealth funds and pension funds kept around 20% of their reserves in gold and equivalent hard assets. However, the Bank of America have now published new guidelines saying the gold reserve should be closer to 30%. That 10% increase is driving up demand because you can't print more gold. Some people are even saying in 5 years, gold could be worth double what it is today. And I don't think that's absolutely unreasonable. How do you actually invest in gold? I personally do it a couple of different ways. Firstly, I buy physical gold. This is my long-term insurance, and as I'm old school, I like having something I can actually hold. Secondly, I dollar cost average into this iShares physical gold ETF on Trading 212. I like doing this because it gives me a lot more flexibility to gradually buy in and move things around when I need to. So to be clear, I'm not trying to buy at the best possible time, and I'm also not going all in on gold. I'm simply allocating a small strategic portion of my portfolio to gold